And as this pushed up and failed, and you didn't sell because you're waiting for the stock to take you out, which is what you should do, this is where you would have got taken out. Bop, right here. Right? So let's go ahead and move our tool to see what would have happened if you followed this. That's a 4.5 to 1 risk reward trade that happened. So you just made 4.5 times what you risked, right? That means we made $45 risking $10. Now, some of you might have had like a light bulb moment here and realized this is a scalable situation, right? So let's say you risked $100. If you risked $100 on this one trade, you would have made $450. Let's up it again. Let's say you risked $500, right? So $500, you would have made $2,250 on this move right here. So I just wanted to show you that this is like, you're going to end up scaling this, okay? This isn't what you're going to do forever. We are just removing the fear and hesitation of the unknown of what's going to happen, right? You got to get experience under your belt, and this is how you do it. So now you take that one trade, you put it in the books, right? You profited, you're good, you track your trade, you put it into, TraderView, a trade tracking website. That's what I use to track my performance. And you're done with that trade, all right? Now you're going to do that 10 more times, or 9 more times. And you're going to track every single one of them. Not every one of them is going to work. So you're going to say, this is not a good entry. Don't try to copy this. I'm just trying to show you. Let's say that you bought, this level right here, and you wanted to buy it as it was going through this little wick high. We touched it. We didn't go through it, but let's, for the sake of learning, right? That stop would have been 15 cents. Okay. So we're going to take our $10 we're willing to lose, divide that by 15 cents, and it's going to show us we could take 66 shares on this. So we would have taken our shares on this, and we would have got clapped. Bam, right? Knocked right out of the trade. You lost $10. Now, this trade is different than this trade. Okay? This is near VWAP after a strong push, right? Out of a triangle, which is again my favorite geometric pattern, and we bought after we saw support hold and resistance break outside of the consolidation triangle. That is a very specific environment for the stock, okay? That's a very specific situation. Now, this over here is not that situation. So you're gonna track that, okay? And you most likely, as a new trader, you're not gonna be able to do 10 exact same trades until you're able to really define what it is you're looking for and why you're entering the trade, okay? So you're gonna be out here kind of acting a fool. Now, this is the stuff that's gonna happen to you, and you're gonna track it. You're gonna write it down. You're gonna say, okay, when I bought after the stock hit 1, 2, 3, 4, on the 5th time that it hit this trend line here, I tried to buy it. Not only that, but look at the volume, man. Look at that volume. Huge red volume coming in, right? It was reducing a little bit. Some people tried to buy this, as you see on this elevated green volume bar here. But then when it should have pushed up, when it should have left this zone and lifted, we never got volume coming in. Instead, we get a ramp of selling volume. This is telling me that we can go down, right? We're going down, boom. And it did go down, right? Still found support, and then it went down again. So now you're just wasting, I think it's called opportunity cost, right? Through time. So you are giving up all of this time. You could be investing somewhere else, analyzing something else in another trade. But instead you're investing it here on this weak ass trade. Not only is it weak as hell, but we just moved a ton, right? A ton, right? These are just all reasons you need to track like why you took the entry, right? But I'm just showing you some trades you're going to lose, all right? But when you lose, you're only losing $10. Now you do this 10 times and you're going to get a sample size. Now, your sample size of 10 is going to give you statistics, right? You're going to see how accurate were you? Like, how many times were you right? How many times were you wrong? When you were right, what was your average gain? When you were wrong, what was your average loss, right? Your loss should be exactly the same every time. Now, this is not easy to do. This is not going to happen on your first day or second day. You are going to have to really work on this. All right. You're going to really have to work on that. And when you can get to the point where you know, if I enter, I'm only losing X amount because you've done it 10, 20, 40, 60, 100 times before, and every time you only lost that amount, you've now given your brain the certainty of what's going to happen, right? Like, you don't know the stock is going to go up or down. You don't know if you're going to have a profitable trade or a lost trade. You have no idea. You just know when you enter, the statistics are in your favor. Your edge is present, and the setup it warranted a trade. Okay. Now, when you get these statistics, let's just say you didn't do very good. Let's say you were only right, 2 out of 10 times, and the other times you lost money. Well, lucky for you, you managed your risk, right? Now, because you managed your risk, if you lose 8 times and win 2, you've only lost $80. Remember, you were okay losing 100. Now, there is going to be a struggle in your mind on the fact that you actually lost money doing this. You're going to start questioning it. Should you even be doing this? Is this worth it? Are you ever going to figure this out? Why do I suck? But those are all things that are going to get corrected over time of doing this exercise. Now, what I want you to do is repeat this exercise over and over and over. Your sample size of 10, you're going to do the 10 sample size. Okay. Now you're going to analyze the results from your 10 trades. If those statistics on those trades are satisfactory, you're going to repeat that. Right now, you're going to keep repeating this over and over and over. Your 10 sample size is just going to keep on happening over and over and over until you can execute each one of these trades, each one of these stops, right, with your exit strategy too. So you're going to continue to repeat this until you can do all 10 trades without a single mistake, right? You will have mistakes. I had mistakes. Everybody had mistakes. And that is your emotions and your psychology getting in the way of your logical execution. So just know that the mistakes that you do during these 10 sample size trades, those are psychological hurdles you need to get over. All right, so a quick recap here from what you should have got from this. First of all, pick the amount of money you're willing to lose. Get to divide it into 10 trades. You're going to execute those 10 trades, and then you're going to analyze the results. Okay. What you're going to learn from that is that no matter the setup, no matter the stock, no matter anything, every single trade is the same. Every one. It doesn't matter what the stock was doing, what the news was. It doesn't matter. Because your risk is fixed at a finite number of $10 in this example, you're only going to lose the exact same on every trade, right? Now, I trade in risk multiples. So let's say I was a 2-to-1 trader, and every time the price was up 2 times what I was risking, I took the profit, right? That means that no matter what happens, every trade would have only been a $20 winner. That does something to you mentally. That does something to your brain's ability to accept uncertainty because it becomes certain. The next thing that you should be kind of picking up on here is this is going to remove your hesitation. You're not going to hesitate to enter the trade because you know what's going to happen. The consequences of hesitating are detrimental to trading, okay? If you realize you're hesitating at any point, best thing you could do, take your hands off the keyboard, back up, maybe push your chair back a little, get out of there. It's sucking you in. All right. You just don't want that. Okay. You don't want that. I hope you guys found some value here. I hope you guys actually practice this. This is how to do this. So this exercise was taken from the book Trading in the Zone. It's one of the best trading books on earth. If you haven't read it, you must read this. This is a must read, all right? It's mandatory. It will help you immensely understanding what's going on, why it's happening, and you need to know those things to satisfy your brain, right? This is all coming down to psychology here, right? Just because you know what a bull flag is doesn't mean you're going to be able to actually enter it with the risk size you want. And this here is going to teach you how to do that. And as you are doing good, so say you do your first 10 trades, it doesn't look great, right? You do the next 10, starts looking good, right? It looks great. If it continues to stay bad, you need to stop, look at what you're doing, adjust your strategy a little bit, and then try the next trades, right? And if those come back better, you want to stick to what you changed, right? And you're going to continuously tweak these 10 sample size trades for the rest of your career. It's going to always be like this, right? So it's never going to be one trade is in control of your emotions like that. It's going to be all 10, right? And if all 10 come back bad, well, if you analyze it correctly, you're probably doing something wrong. If you're not doing anything wrong, you got to give it one more shot of 10 trades and come to a conclusion off of that. If you need any more help, contact me, write in the comments, and I will be sure to give you some one-on-one time, and I will attempt to assist you in this whole process. So please have a good day, guys. Stay green, stay disciplined, and stick to your strategy.
Daddy?
A quick editor's note, since I realized I didn't add this in the actual video. If you do this exercise and it's coming back with negative results, what you need to do is size down. Okay, so say you're risking $20, $10 each trade, you need to reduce that to $5 or $2 each trade, all the way down to a single share. Okay, if you still can't do it at a single share or $5 a trade, you need to move to a simulator. Now, I highly recommend everyone, if you are just coming into this situation, if you're not very versed with trading in general, I suggest all of you start off in a simulator. It will put you much further ahead in the whole executing, what buttons to use, how certain orders work. You don't want to do all that with real money for the first time ever, because obviously that's going to trigger you and your trading is going to reflect that. So if you're doing bad in the exercise, size down. If you're still doing bad, move to a simulator. If you're doing good in the exercise, size up and continue to size up every single time you do good. This is pretty much gonna give you like a roadmap on how to make money. If you continue to do good, there's no reason you shouldn't be risking $100, $200, $300 a trade. If you continue to do bad, though, you got to keep reducing that size, again, to ensure that you survive long enough to make it. Right? So if you found value, if you like this, please like, subscribe, hit me in the comments. Let me know anything you want to say. I'm here, and I'll see you guys next time. Peace.